What a pleasure to be here today in Big Rock's Brewery, in the brewery itself in Liberty Village in Toronto. And it's particularly fitting as today we're talking about valuations in the brewery industry. Now, Big Rock Brewery is a Canadian public company listed on the TSX. It is based in Calgary, Alberta, and it has a market cap of approximately 14 million. It produces craft beers and other alcoholic beverages. It's a good time to be in the craft beer business with the craft beer revolution that we've seen both in Canada and the US in recent years. Spencer, hi.
Hi.
Your role in corporate development and investor relations at Big Rock Brewery is very interesting. You have a lot of insight into the Canadian brewery industry and what drives value in that industry. And of course, you are a CBV. So you have a unique perspective. I'd love to know a little bit more about how do you use your CBV expertise in what you do day to day at Big Rock?
Yeah, great question, Catalina. It's nice to be here. It's multifaceted for sure. I think I'm a bit of a unique entity when it comes to CBV, obviously, and being in an actual company on the corp dev side of things. And so for me, it's this unique juxtaposition of the CBV skill set, which is obviously can be driven extremely by quantitative type analysis, but I live in a very qualitative world, and it's very touchy-feely in terms of I get to spend time in our brewery in Toronto. I get to spend time in our main facility in Calgary as well, and so the day-to-day for me consists of managing our corporate model, the forecasting that comes with that, obviously communicating our external to our bankers, our research analysts, setting the market expectation on what we expect from a public co perspective in terms of reporting. And so the CBV skill set in terms of what it's given me is that that teeter-totter, if you will, of the understanding of how do you balance that very quantitative types of skill set, but with a qualitative lens. And so it's allowed me to really take that and put it into an industry where I can speak to obviously the fundamental type of analysis that comes with any public co-business from a capital markets perspective, but marry that with a very intimate and very tangible industry and company, really, like Big Rock and the brewery industry itself. So
absolutely,
yeah.
It sounds like it's knowing the business and telling the story.
Totally, exactly, yeah.
That's fantastic.
Yeah.
So that does all sound very exciting. Just to set the stage a little bit on the brewery industry, it's made up of about 1,200 businesses in Canada. It's a $7 billion industry with close to $2.5 billion in profits, and it employs over 13,000 people. Now, the industry is unique, so when assessing value creation and the value of a brewery business, there are some key business considerations. And of course, there's many reasons why someone would undertake a brewery valuation, be that for a transaction, for potentially financing purposes, litigation, if there is potentially a shareholder dispute, or tax reasons, as we're seeing lately a lot with intergenerational transfers. So what, in your view, are some key drivers that impact the value of a brewery business?
Yeah, absolutely. I think, right off the hop, I think unsurprisingly, when you think of a brewery business just, off the street, it's an asset-heavy business. And so with that obviously comes, the reliance on unique and specific appraisals that would come with, the assets from a brewing perspective, but also from a packaging perspective. Whether that brewery has capability in canning, bottling, which has obviously fallen by the wayside in terms of production from a total consumption standpoint, but even kegging. And so, I guess one of the, or a few, I guess, of the key sort of things that you want to keep in mind when you look at the brewery industry and key topics for valuation is obviously that asset value. You also want to look at, from a manufacturing standpoint, how efficient is that brewery at transferring what largely can be a relatively high fixed cost structure. And we'll get into operating leverage, I think, a little bit in terms of how that affects the profitability of a business. But that manufacturing piece is so important to understand, and really that stems from what's the true capacity of the brewery. and you want to make sure that, as a brewery continues to hopefully try to grow, that they're continuing to try to be able to match that sales volume from a production volume perspective, and trying to make sure that line is constantly towed.
Yeah, fair enough. And so what are investors paying attention to? Is it top line revenue?
Yeah, really, it's going to come down to EBITDA, and in our industry specifically, adjusted EBITDA, really, which is just the add back of some non-cash expenses around share-based compensation, et cetera, which is not uncommon in our space from a public co perspective. But really, it's EBITDA because you've got a depreciation-heavy business with assets on the books consisting of a significant amount of value that drives the business from a net book value perspective. And so EBITDA is really going to be the piece, and from that, EBITDA margins as a percentage of revenue. I talked about that OEM, which is really that manufacturing percentage of efficiency on how you actually produce. That's going to be another key one. And then gross margin, obviously, of course, in any business is telling. In our business, especially, you see in consumer goods, inflation is the narrative everywhere.
Yes.
And so, we feel that, entering into 2022 last year, we were coming off of 35-year highs for aluminum costs. And guess what? Aluminum goes into cans, and cans is a significant cost when you're pushing out volume of beer. And so, when those costs are increasing, that's going to drive your gross margin and place a lot of pressure on it. And so those are really key telling metrics that you're going to look at right away from a valuation perspective.
Okay, makes perfect sense. Now, you wrote an excellent paper recently on issues affecting valuations in the brewery industry. Thank you for that.
Yes.
And in the paper, you mentioned 3 key trends that are having major effects on the industry right now. Topics which all affect market share and values in the industry, be that market caps, enterprise values, or even values of brands. Mm-hmm. Can you tell us a bit more about these 3 key trends?
Definitely. I think the one first and foremost, and from a consumer perspective, unsurprising, is really this continued shift that we start to see in consumer trends and consumer demands. Really, at the end of the day, the ultimate customer we call is the consumer because it's the one actually consuming the beer. Or in this case, we've seen this significant shift in the last kind of 10 years towards what we in industry call RTD, but really it's ready to drink beverage. So really it's anything that is a mixed sort of beverage. You've got your vodka soda type seltzer-based products. That's really what we call a ready to drink or RTD. Yeah. And so the growth in those, unsurprisingly to anybody, that's it's been significant. And so as a brewery, you're constantly paying attention to what those trends are from a consumption standpoint, because really the volume has to come from somewhere. Alcohol consumption as a whole, though we obviously saw the quick spike in COVID, really has been flatlined to almost declining for the last 10, 15 years. And so that market share piece is always churning. And so the pressure on breweries to continue to innovate, provide new products. There's this big, we call better for you push, which obviously I don't think consumers have ever been, and myself included, we pay attention and we know how to read nutritional labels now, which is great. But at the same time, when you're the producer of those products, you need to really pay attention. And so I think that's been obviously the biggest one. But we love that because it drives innovation, it drives that real unique approach to how do we continue to evolve beverage alcohol. And you've seen the growth of non-alcohol.
Yes, big fan of that.
Yeah, absolutely, and it's great, right? It's a great alternative because you still get that, you've got IPAs and you've got lagers and you've got all these different families of beer that producers are able to make in non-alcohol format, which is fantastic. Yeah. So you've seen the growth in that, which has really been a huge piece for any brewer as they continue to look to innovate and continue to remain relevant in that market share stack. The second piece that's really started to evolve, and really it's always been there, but it continues to change, I would say more iteratively than ever, is the regulatory framework that we operate in. In the paper I touch on the upcoming ban of single-use plastics. Yes. So the high cone carriers, the 6-can plastic carrier that we've all known for a long time, those are going to be gone, which is fantastic, obviously from an environmental perspective. But
big industry change, certainly. I'm sure.
Huge.
Yeah.
I mean, for especially breweries of, if they have a 6-pack SKU, which many do, you're directly affected by that.
Yeah.
And so you're forced from an operational perspective to say, okay, well, what are our alternatives? That deems new packaging capabilities. If you're not packaging your stuff in-house, you have to obviously find a partner that can package that for you. It won't be that plastic carrier anymore, so what are the alternatives? And we've already seen innovation in that space, whether it's reinforced cardboard, or there's some really cool products in that space. But this one, from a regulatory framework, we were at least given a heads up on.
Yes.
You're not always as lucky.
Yeah.
So governments change, and regulation changes too. And so for breweries, especially smaller in scale, that can pose big challenges because there's capital requirements, and there's change in process and practices that has to come as a result of that. And then the third really is because of the capital intensive nature of starting a brewery, you've got this growth in craft beverage as a whole. And so that growth in craft beverage, to remain not capital intensive, you see this real growth of these asset-light, brand-focused businesses, which has been great for the industry, again, because you've got players that they will rely on breweries, such as Big Rock, that have a ton of asset capacity, and they'll come to them and say, hey, you're gonna make our product. On a no-names basis, we'll contract agree to you, and you guys will produce on our behalf. We might help you procure raw materials, we'll agree upon a price, we'll agree upon a cost, and you're now our exclusive producer of that.
So contract brewing.
Yes, contract brewing. The consumer will never know where that product came from. That product is labeled as that branding has dictated, and it's been a huge growth in the industry. And for players such as Big Rock, but there are others across the country that have spare capacity from an asset perspective, it's a huge opportunity to really, get into that operating efficiency discussion, because they can fill otherwise stranded capacity for incremental variable revenue, which is fantastic. So the growth of that side has been significant.
Okay, so let's go back to what you said about changes in consumer preferences, ready to drink, low alcohol. How easy is it to change kind of production processes to move in that direction?
Yeah, I mean, I guess the short answer is it depends. Obviously, larger scale operations, it becomes harder and harder to change those products or processes, and more expensive. For a smaller brewery that is quite nimble, they can probably change things pretty quickly. For a brewery of our size, it requires some significant analysis. There's business cases that we have to make sure are agreed upon by our company, our shareholders, our board, and it warrants capital investment in a lot of opportunities as well. We spent $8.7 million in 2021 on an increase in our can line and adding the pasteurizer. And again, pasteurization, that was a direct result of the growth in RTD beverages, because a lot of those beverages warrant that type of process. And so therefore, we didn't want to cut ourselves off from that opportunity in the marketplace. And so it was deemed a necessary investment.
Okay, so you mentioned changing consumer trends, the ban on single-use plastics, potentially requiring CapEx. It sounds like a bit of a challenging environment right now in the brewery industry. Is this something you would say would tend to negatively impact cash flows in the near term, or how are you seeing these trends impacting on valuations?
Yeah, it's a great question. I mean, I'm not going to act like the brewery industry is the only industry that has challenges. But at the same time, I mean, it's been a tough slog, I think, regardless of scale in the industry. These market pressures are continuing. I mean, even from a cost of goods sold, we talked about inflation a little bit. When you've got a business that's so heavily focused on raw material procurement and input, you can see those costs increase quickly. And in beverage alcohol as a whole, it's known as a relatively low margin business. So you take a traditionally low margin business, you layer on increased cost, but you're also at the top line layering on increased competition, on declining beer consumption. you get these pressures of margin is just, there's pressure there for sure. But at the same time, provides opportunity.
Yeah.
Right?
So are we saying decrease in stock prices have been due to kind of the two-pronged pressures you've been talking about? Is that the story?
Yeah, I think from a capital markets perspective, absolutely. I mean, you've really seen erosion of gross margin, like I said, from that rising material cost, and distribution as a whole. Unsurprisingly, again, a narrative that, from the result of COVID and obviously coming out of that, supply chain took a significant hit. And we really stress tested the global supply chain, and every single brewery would have felt that. And if they said they weren't, that they were lying. And that's okay. But distribution, it continues to creep up from a cost perspective. And so again, as a brewery, you need to always be continuing to evolve and analyze, where are we delivering product, and is that valuable? All the way from the procurement of the barley and the yeast and the products that we're putting into that, direct all the way down to the consumer. We sell beer across the country. And so it's important to make sure that if you're not paying attention to those costs of goods sold as they trickle down to the consumer and really your whole operating structure, you can discover that you're selling beer at a loss quickly if you're not really paying attention. And so it never before has it, I think, been as fast paced as it is now.
So we know that market share is dominated by two major players globally, and in Canada, of course, it's Molson Coors and Anheuser-Busch that control something like over 80% of the market. We also know that there's been some growth in the industry lately, despite kind of the challenges we've seen macroeconomically and with COVID. You do mention in the paper that the number of breweries in Canada has actually gone up, but that beer consumption has fallen steadily over the last few years. And of course, we live in a world now where inflation is the name of the game. So with rising input costs, making what's already a competitive industry that much more competitive, how do you see things? How do you see that affecting the risk profile of a brewery business? And how do you see that potentially creating opportunities?
Yeah, no, it's a great question. I think one of the cool pieces about beer and craft beer, but really just beer as a whole, is, you go to any liquor store and right on the shelf you see, it might be a mom and pop shop that has one type of beer, and they will be within arm's reach of a Coors Light. And they're still competing. They have different customer segments that they're going to, but that customer and that consumer is still looking at those types of products within sometimes arm's reach of each other. And so in beer, you see this really cool, consistent market pressure between players of all shapes and sizes. I mean, you've got, Molson Coors and Anheuser-Busch just way up on the ether here in terms of scale and the amount of beer that those guys pump out on an annual basis. You've got these, sometimes very often small microbreweries that are thousands across Canada now, and they might make 250 hectoliters of beer a year. These guys are making north of 1 million hectoliters of beer. And then you've got Big Rock somewhere in the middle of it, and Waterloo and those types of players. And it points to opportunity because at the end of the day, any of those players can create a product that a consumer is going to reach for first. It's driven again by just that spirit of innovation that continues to seem to just drive where that consumer goes. I would say that brand loyalty is constantly being challenged in our industry because consumers want to try a new product. Yeah. They're going to go to the beer store and they're going to probably grab beer that they're familiar with and they know is good. But part of that consumer base wants to reach for something they've never tried before. Yeah, and so absolutely. That experimentation and that cycle of innovation is something that every brewery needs to be aware of because it's going to continue to drive volume because you've got that curiosity coming from the consumer all the time.
Yeah, absolutely.
Yeah.
Love that. So we talked a bit about the industry challenges. Maybe we can shift gears now and talk about some of the operational challenges. What do you see as kind of key operational challenges for breweries?
Yeah, I mean, the biggest one, and again, this relates back to the cyclicality of really the nature of the industry that we operate in, is, it is cyclical. You're much more prone to wanting to have a beer or two in the patio in the summertime versus when it's -30 out in the middle of December. They're still good in both situations, but it's definitely a bit better in the summertime. And so, every brewer, especially in North America, they're aware of that. And so as a result, though, inventory management becomes a huge piece in terms of how do we manage working capital restraints and really that, liquidity piece where, inventory production, making sure that you, again, awareness of that production curve where you only have so much production on a periodical basis, on a monthly basis to produce. We can't be a just-in-time producer. It's not efficient. And so how do you manage that? You've got that cyclicality of demand, but at the same time, you're trying to always consistently smooth production to take advantage of that fixed cost structure that a lot of breweries operate with. And so, cash flow forecasting becomes extremely paramount. You're looking at inventory requirements. How do you build that inventory before your revenue is even there? So therefore you're drawing on cash, and then you're kind of got that hay season where you've probably produced most of your, kind of Q2, Q3 calendar year product. You're selling through that, so now you're making more money. But then there comes the storm of winter where, you get that, boost in Christmas time, et cetera, but it's not nearly what it was in Q2, Q3 in the summertime. And so it's prudent to have a lot of control and really insight into, cash flow forecasting, access to capital, as it ties to liquidity, and really just that working capital piece in any brewery of any size.
Yeah, and I guess management expertise and being able to see ahead of that and
totally.
And build out those cash flow forecasts, and that's really a key CBV skill. So
absolutely,
lucky you.
yeah, there you go. It helps for sure.
So you talked a bit about industry consolidation. I'm certainly getting that sense from kind of the trends we discussed. How likely are we to see industry consolidation in Canada, and what do you think a strategic buyer would be looking for?
Yeah, great question. I think, again, using that Carlsberg Waterloo transaction as kind of a proxy, I think you're going to continue to see value on existing production, and really that leads back into what we talked about in terms of manufacturing accounting and how a strategic is going to look at a plant's total capacity, and they're going to say, how much volume can we throw in there, while again being aware of that operating leverage and that fixed cost structure to really maximize, I think, the cash flow potential, I guess, of any brewery or manufacturing business. And so I think that's a key piece. I think distribution is a key piece. Even Big Rock, we have only one of 4 distribution licenses in Alberta to directly distribute, beverage alcohol. The Alberta Gaming and Liquor Commission, they're not going to go and start to issue a bunch more of those because obviously they want to have, purview into who has access to those distribution licenses. So the value lies in, asset capacity and utilization of such, and really the distribution piece is going to be the key for strategic purchasers. As they continue to kind of take advantage of that operating leverage that we spoke about.
Spencer, thanks so much for talking to me today. It's been really informative. I really appreciate it. Thanks everyone for tuning in on issues that affect valuations in the brewery industry.